Last week I said the bottom confirmation indicator has moved higher, but the confidence level is shooting a lot higher here for risk, and it's falling for safety. This tells me we're going higher next week. We had a great week this past week for the equity markets, while long bonds tried to rally, but then they failed. So how do we look going into next week? Before we get into the market analysis, I'm still experimenting with the use or non-use of background music in these market review videos. This week, I'll try using music just in the segues between sections, but I'll also be careful not to make it too loud. Please let me know in the comments below if this works better for you or if you prefer silence between each section. Let's dive into the analysis and see how things look after a nice week higher for equities. Now, normally I don't show just one day worth of performance for the equity markets, but I'm going to do it here because it's kind of interesting. Actually, if you look at Friday, we had a pretty kind of an unhealthy looking stock market here, except for small caps, which did really well. Dow finished second, S&P third, NASDAQ finished with a loss, and ARK Invest finished with a loss. So this looks unhealthy, but let's take a look at the 5 days previous, so the entire week, Monday through Friday. And if you look at this, we had a very healthy rally here with ARK finishing first, small cap second, NASDAQ third, SPY fourth, and Dow last. This is really healthy. In fact, you can see that the NASDAQ was up almost 3% for the week, and ARK Invest was up over 5.25% for the week. This is a very healthy risk appetite. And if we look back over the past month, you can see what we all felt. The market was dropping, and then it finally turned around and headed higher this week, which is good news. And if we look at year to date, this looks very healthy. We've got the highest risk equities, ARK and the NASDAQ 100, up the most, followed by the S&P, followed by small caps, followed by the Dow. Nothing could be better.
I'm afraid to say how I
And how does all of this look when we take a look at the bottom dynamics? Well, you can see what's happening here. Last week, where this confidence was rising and the bottom forming indicator was falling and the bottom confirmation indicator was rising, I said that we were going to go higher this past week, and we did. Now where are we? Well, we have a very strong bottom confirmation here with bottom confirmation level at 100% and the confidence level up here at like 98, 99%. This is a very strong bottom confirmation. Now, we didn't go down much to get to this bottom, but this is a good sign going forward. What I don't like right now is you can see that the bottom confirmation level has dropped over the last couple of days, while the bottom forming indicator is going up. The confidence level is still very high. So I'm not sure where this is going to go next week. We'll have to wait and see. But if we look at risk versus opportunity, looking at the old metrics, this is fabulous. I mean, you can see risk acceleration has just plummeted. It's down here just a little above 10, maybe at 11. The risk level, this red line, down here at 30. That's extremely good. I don't get concerned until these are up here north of 60, 70, or 80, and as they were back here. And you can see back here, we had reason to be concerned. Things were dropping, but now they look great. And the opportunity level is very high here, above 80 still. This looks very, very healthy. And if we look at the new metrics, you can see that the risk acceleration has been increasing, but the risk level is staying down here at a very low level. What I do like in this graph is the opportunity level is steadily increasing here, even though it kind of fell off a little bit on Friday. And what about equity versus safety? Well, if you look at what's going on here, now prior to July 21st, the NASDAQ 100 was in first place for 12 weeks, but you can see that's kind of fallen off the chart. But let's take a look at where we are now. So it went from here up to here, and then it dropped, cause for concern. And it dropped more cause for concern. And then it started to recover here. And then what happened this past week? This past week, it shot up to number 1. This looks great. And if we take a look at small caps were in number 1 back here. They fell off just like the NASDAQ 100. They really plummeted just like the NASDAQ 100, plummeted even more, plummeted right to the bottom, and now we're here. Now, this analysis isn't complete unless we follow the money, follow the cash. So that's what we're going to do right now. If we look at cash levels, cash was down here, moved up, not too bad here, but then it moved up here. That's big cause for concern. Moved up here, that's time to run and hide, run and hide, sort of run and hide. And now it's plummeted down here to a very benign position in 5th place. Now I say sort of run and hide here because in my review last week, when we looked at everything all in, even though cash was up here, it was pointing to an up week this past week, and that's in fact what happened. But what about long bonds? Well, boy, if you look at long bonds, they just have really struggled here. Now, back here, we had a healthy Treasury market on July 21st, but boy, that didn't last long. Unhealthy. And the reason I say it was healthy back here is EDV, these are north of 20-year duration, so 20 to 30-year in duration, but you can see that they were ahead of the 20-year bonds. So this is a healthy relationship for Treasuries, but you can see that they just plummeted down here to the bottom. And now there's, and then they moved up, but still below TLT 20-year. But now, even though they're down here at the bottom, they are ahead of 20-year Treasuries. So starting to look a little bit healthier on the Treasury side, but it still has a ways to go, as you'll see when we go through the charts. And what about the buying and selling pressure? This gives you another piece of the puzzle and tells a story. Well, you can see that the Dow pulled back here, but way back here, even before it bottomed out, you can see that the buying pressure started to increase slowly, and now it's above the selling pressure, and we've had a nice rally here. This looks very good. What about the S&P 500? A little bit riskier as an index. Even though it has more stocks in it, it's a little bit riskier than the Dow, or considered riskier than the Dow. Or the stocks in it, many of them are considered riskier than the Dow stocks. Well, you can see the same thing here. This was falling back here, but you can see that the buying pressure was telling you that this drop was not going to last. And in fact, now it's well above the selling pressure and continuing higher as the price moves higher. How about the NASDAQ 100? Again, falling price, but way back here before it bottomed out, we started seeing signs that the buying pressure was moving higher, and now it's shooting very much higher as the price increases. And then ARK Invest, similar picture, dropping here, but well before the bottom. The buying pressure bottomed out, started moving higher, and we've got a very healthy looking picture right now. And then what about the Russell small caps? Same thing. You can see the price was dropping, but back here before it bottomed, the buying pressure bottomed out. Yeah, actually it kind of bottomed twice here, so maybe not. But then it started increasing and is shooting higher. So this looks very good going into next week. And what kind of story are the sector rankings telling us? Well, if we look at the old metric, you can see that last week up here in this top table, we had a very healthy risk appetite. Bitcoin ranked number 1, technology, consumer discretionary, way up here, semiconductors here, ARK innovation. You know, you've got cash down here, treasuries way down here, consumer staples in the lower half of this. This looks great. And what about this week? Very similar picture. Bitcoin, technology. You can see semiconductors bumped up a bit. ARK innovation surprisingly moved down a little bit, but that doesn't mean necessarily that it was bad. It just means that some of these other ones possibly moved up more and displaced it. But I like the fact that cash is even lower, consumer staples are even lower, and treasuries are even lower. So this is healthy. This looks great. And what if we look at the new metric? A little different picture. This one acts a little differently. As I've said before, I think this is a better metric for selecting stocks and ETFs to invest in, but we're trying it out and looking at how it measures risk. And what it's showing here is that last week we had Bitcoin in number one again, consumer discretionary up here, technology here, very nice. NASDAQ 100 up here, again, looking very good. We had ARK Innovation here, kind of in the middle of the pack. But look at cash, treasuries, consumer staples, gold, all down here at the bottom. This looks very healthy. And then if we fast forward to this week, again, Bitcoin at the top, consumer discretionary slipped down one. We had the NASDAQ 100 here. And then you can see again, cash, consumer staples, gold, treasuries, all way down here at the bottom. This is a very healthy looking stock market. Now let's take a look at sector rank acceleration, because these move much more quickly and they kind of give you a sense of where things are moving rather than where they've been. And if we look at last week, consumer discretionary right here in first place, this was a good tell and turned out to be very accurate. And then we had ARK Innovation up here, again, very good. But, it was a little uncomfortable. The cash and gold were up here. We had emerging companies here. That's good. Treasuries down here. And consumer staples all the way down here. That looks great. The only concern here is cash and gold being up here. Let's look at this week. What's happened since then? Well, of course, consumer discretionary has moved down here. But look at what cash and gold and treasuries have done. They're all down here at the bottom, along with consumer staples. So this looks like a very healthy risk appetite going forward. And let's take a look at the new metric. New metric, no surprise that energy's in first place here. It's been doing very well lately. We had cash up here, treasuries, gold, consumer staples, and consumer discretionary down here, which looks pretty unhealthy with cash up here, consumer discretionary down here. But if we go to this week, again, energy is number one. Again, energy is number one. But and consumer staples has moved up, so that's a little confusing. Cash has moved up a little bit. That's not necessarily good. And then we have gold and treasuries down here and consumer discretionary down here. So this is a different picture than we saw with the old metric. This is saying there could be a little bit of trouble. But like I said, these are new metrics. We're experimenting with them. Don't know how this is going to play out next week. And that'll tell us a lot. So if the market drops off or pulls back next week, maybe I'll start believing these a little more. But if it goes higher, then I think the older metrics are the ones we should be looking at.
I feel like I'm afraid.
And how have treasuries been performing? Well, you can see that they tried to rally this past week, and then they really kind of plummeted here. At least the long bonds plummeted quite a bit and finished the week negative, with longest duration EDV finishing dead last and TLT finishing second to last. Other than that, the shorter term duration treasuries, intermediates, and short-term treasuries were all higher for the week. So this looks like an unhealthy appetite for treasuries. But what if we look back over the last month? Well, it's not going to look very good. Well, it's not horrible. You can see they bottomed out here, tried to rally, and then pulled back on Friday. What about year to date? Well, year to date, you can see we're off this bottom. That's great. We're a bit higher, but there was a little bit of a pullback here. And then if we look at 5 years, we are, when we were at this bottom, we were pretty close to the bottom back here on October 21st. Let's see how close we were. Yeah, we were within a percent or two. 32%. Come on, cooperate with me here. 32%. Yeah, we were about at the bottom here just a few days ago. And, I've tried to recover a little bit. And then if we just go for the gold here, you can see that we're at levels that we haven't seen since 2010. So hopefully long bonds are a bargain, but it's going to take, could take months to years to know if this really is a bargain entry point here. And how does all of this show up in the buying and selling pressure? Well, you can see that over this entire duration, short-term treasuries have been rallying. This is a fairly nice rally here, going higher over the entire time frame pretty much. And for the most part, the buying pressure has been above the selling pressure, which is where it is right now. If we look at intermediate treasuries, a lot more challenged. You can see that the price was falling and not going up, and the selling pressure was well above the buying pressure. Now, recently, in fact, back here, just like equities, where this was still falling, this bottomed out and started going up. The buying pressure started increasing back here before this bottomed out here. So this is a good sign, and maybe treasuries will continue higher as we move forward. What about intermediate to long treasuries? Again, a declining price, as you can see here, and the buying pressure has been moving higher, but is now below the selling pressure. Not good. And then if we look at 20-year treasuries, long bonds, you can see, again, very challenging situation here. Selling pressure well above the buying pressure, but back here, the buying pressure started increasing and is currently above the selling pressure. So this looks healthy as well. We'll see where this goes next week. Wow. And what about that inverted yield curve? I've said wow because the current situation is exactly as it was 1 month ago. Exactly. So you can see that we're inverted, folks. If you look a year ago at this blue line down here, that is not inverted because the rates here at the short end, 1 year, 2 year, are lower than the rate at the 10-year. If you look now, the rate here at the 10-year is lower than the rate here at the 1 year and 2 year. So that is an inverted yield curve. And let's see, how inverted are we? We're 69 basis points inverted. Can't make that stuff up. All right. And then what does the market think about what the Fed's going to do on September 20th when they meet in a few weeks? Well, they think that the Fed's not going to do anything, that they're going to leave rates right where they are. 94% confidence level that the Fed doesn't move rates higher. And there's a 6% confidence level that they'll move rates 25 basis points or 1/4% higher. And then if we look here at the inversion of the yield curve over time, back here in March, as you've heard me say, it was inverted 1.1%. We bottomed out here again, went down again, up, and now we're back here. So currently we're about 69 basis points inverted, folks. And how's gold looking? Well, interesting. I mean, gold pulled back just like everything else here. And you can see that the selling pressure started increasing way back here, peaked out here right at the bottom, and since then has been falling, and the buying pressure has been going up. Gold has been having a very nice rally. Not sure what's driving it. And how about Bitcoin? Wow. Well, you can see how the price of Bitcoin was just dropping here. And then we had an event that caused the price to just shoot up. It went up like 17% in one day, and then has since pulled back a little bit. So why did this happen? Well, the SEC lost its bid in court to stop the Grayscale Bitcoin Trust from forming an ETF.
Now, it is Friday, right before Labor Day weekend. And so Tom Staudt, our COO, we had to pull him off the golf course, actually, to come in and talk about all of the exciting things going on around Bitcoin, the potential outlook for it, given the SEC's loss to Grayscale this week. So you'll hear a little background noise. He is on the golf course.
Thanks, Cathie. It certainly has been a momentous week in the news for the cryptocurrency and the exchange-traded fund industry with Tuesday's announcement that the SEC lost its court case against Grayscale. I think one of the things that is important to talk about is exactly what was said in that announcement, in that judgment. First and foremost, the courts did not say that the fund has to be allowed to convert to an ETF, nor did it grant that approval by itself. It simply said that the SEC has to go back and review its ruling on that fund. So we saw certainly the price of Bitcoin jump up on the announcement, a lot of excitement. We've since seen that come back in. Part of that coming back in was also that in the same week, later on Thursday, they delayed some applications for a few other funds. that had also filed for that, which is not unexpected.
So this caused the price to really shoot higher. Now it's since pulled back. This is going to play out over time, and I'm sure there will be appeals and God knows what's going to happen.
If it's only her.
2 weeks ago, I was beginning to fear that the downturn in the markets could be more than just the August doldrums while everyone was away on their vacations. Thankfully, this past week, equities moved strongly higher. Let's see where this goes next week. Until then, I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.
So you wanna know my name? I hope you got a lot of time. I'm not sure what you've been told, but no one's been a friend of mine. From the day I drove the car to the riverbed, they'd never heard what I've said. So pardon me for acting wise. I know what hides behind those eyes. Where do we go? About the one I loved and left me back in 91. They say I was the reason he's not here today. You don't care to see behind my pain. So pardon me, I have to run before you're just another one. Where do we go when the fight comes knocking at our door? Where do we hide? Changing all the reasons why. Where do we stand when the lies feel like a rubber band? Where do we run when there's no one there to grab the knocking at our door? Where do we hide?